You sit down with a cup of tea, open your bank app on the day your first pension payment is due, and the number on the screen is not the one you were expecting. So you check again. Then you pull over the retirement letter, the email confirmation, maybe a note you wrote on the calendar weeks ago. You look at the date, you look at the account, you tell yourself it may just be late in the day. Maybe it has not cleared yet. Maybe you have missed something small. But as the minutes pass, the feeling starts to change. This is not really about pension policy or paperwork in the abstract. It is about real life landing all at once. The salary has stopped. The new routine has started. Bills have not retired just because you have. Mortgage or rent still needs paying. Council tax still comes out. Food still needs buying. The direct debits do not pause while somebody somewhere sorts out an administrative problem. That is the part many people find so unsettling. You can do everything carefully. You can serve for years, sometimes decades. You can plan sensibly, fill in forms, keep dates in mind, and still end up staring at a missing payment at exactly the moment you expected things to become simpler. And that has been the lived reality for some newly retired civil servants and other public sector workers caught up in serious pension administration delays. On 28 January 2026, Capita and the Cabinet Office issued a joint apology for the worry, frustration, and distress caused. That wording matters because it confirms something many affected people already knew from experience. This was not a minor irritation. For some, it meant weeks or even months of financial strain at the start of retirement. It helps to make one important distinction early because it changes how you respond. When most people hear that a public sector pension has gone wrong, the first fear is often that the pension itself is in danger. That is not usually the right way to think about this kind of situation. A defined benefit pension, the kind many civil servants rely on, is an entitlement built around your service and scheme rules. In plain English, it is the pension promise itself. But the promise and the administration are not the same thing. You can be fully entitled to your pension and still have the first payment delayed by failures in processing, handover, calculation, record handling, or communication. That difference is crucial. It means the problem may not be that your pension has vanished. The problem may be that the system responsible for getting it into payment has failed at a very vulnerable moment, and the first payment is a vulnerable moment. That handover from final salary to first pension income sounds straightforward when you picture it from a distance. In real life, several things have to line up properly. Retirement dates have to be processed correctly, payroll timing matters, bank details need to match, records have to be complete, calculations have to be finalized. If any part of that chain breaks down, the effect is immediate for the person waiting at home. That is why this issue can hit organized people just as hard as anyone else. It is not always about carelessness. Sometimes it is about discovering, too late, that even a secure pension arrangement is not immune to administrative failure. And that broader lesson is worth holding onto, whether retirement is next month or still half a year away. Security on paper is not the same as a smooth handover in practice. Near retirement, the forms, confirmations, timelines, and follow-up matter almost as much as the pension estimate itself. None of that means you need to panic, but it does mean you should take a missing first payment seriously from day one. Silence is not a plan. Waiting without a record can make a bad situation harder to untangle. Once you see the problem clearly, it becomes more manageable. There are practical steps to take. There may be emergency support in some cases. There are records worth keeping from the start. And if the handling falls short, there are complaint routes and possible redress options that many people do not realize they have. So if that first payment has not arrived, or if retirement is close and you want to protect yourself before anything goes wrong, the next part is where the fog starts to lift. When that first payment does not arrive, the most important thing to understand is that a delay at this stage often points to a processing failure, not the loss of the pension itself. That may sound like a small distinction, but when you are looking at an account balance that has not changed, it matters a great deal. The handover into retirement is one of the most delicate points in the whole process. Your employment has ended, your salary has stopped, your pension is meant to take over. For that to happen smoothly, dates, records, payroll cutoffs, award calculations, identity checks, and bank details all have to line up properly. If one part slips, the result can be a very real gap in income. That is why the first missed payment should never be treated as something to ignore for a week or two in the hope that it sorts itself out. Some people did exactly that at first, because they assumed a public sector pension would simply correct itself in the next cycle. But the experience reported by affected retirees showed that delays could stretch far beyond a minor holdup. For some, it became a serious cash flow problem at the precise moment they were depending on that income to replace their wages. And this is where the real-life impact becomes much bigger than inconvenience. A delayed pension payment does not stay on paper. It moves quickly into the kitchen, the post, and the monthly budget. Savings that were meant to last through retirement get used up covering ordinary essentials. Direct debits start to look threatening rather than routine. Some people end up dipping into overdrafts, putting bills on credit cards, delaying payments, or asking family for short-term help. After years of service and careful planning, that can feel deeply unsettling. It also helps to separate two kinds of harm because both may matter later. One is distress, worry, and disruption. The other is measurable financial loss. Financial loss might mean overdraft interest, late payment charges, missed interest on money you should have received, borrowing costs, or other expenses caused by the delay. The emotional side matters too, but the practical costs often need to be shown clearly if you later ask for redress. So if your first pension payment has not arrived, the next move is to become very methodical very quickly. Contact the pension administrator directly as soon as the payment is clearly overdue. When you speak to someone, ask for their name, the date and time of the call, and any case or reference number. Ask exactly what stage your pension case is at. Has it been calculated? Is it awaiting approval? Is any document missing? Are your bank details confirmed? Is the retirement date showing correctly on their system? Then ask a question many people do not realize they can ask. Is there any emergency payment, interim payment, hardship arrangement, or loan-style support available while the case is being resolved? That does not mean it will exist in every situation, and it does not guarantee immediate help. But if the delay is causing genuine financial pressure, it is a sensible question to raise straight away. After every phone call, send a short email or written note confirming what was said. Keep it simple: who you spoke to, what they told you, what they promised, and what happens next. This creates a paper trail, and that paper trail can become extremely important if the problem drags on or the answers begin to change from one conversation to the next. At the same time, start keeping evidence of the impact on your finances. Save bank statements, screenshots, late fee notices, overdraft charges, credit card interest, letters about missed payments, and copies of any pension forms or retirement notices you have already submitted. Keep a dated record of each contact, including promised callbacks that never happen. This may feel fussy in the moment, especially if you are already stressed, but ordinary paperwork often becomes the strongest proof you have. A missed direct debit notice, a bank charge, a written confirmation of your expected retirement date, even a short email chasing an update can all help show what happened and what it cost you. Once you do this, the situation begins to shift. It is still serious, but it is no longer just a worry sitting in your head. It becomes a documented case. And if the administrator does not respond properly, that record is what gives you the strongest footing for the next stage. If the administrator still does not put things right, this is the point where repeated chasing needs to turn into a formal complaint. That matters because there is a difference between asking for an update and making a complaint that must be handled through a proper process. If you have had vague answers, long silences, broken promises of callbacks, or no clear timetable for payment, it is reasonable to move beyond informal contact. When you do, keep your complaint plain and organized. You do not need legal language. Set out the retirement date, the date the first payment was due, when you first contacted them, what responses you received, and what has happened since. Then explain the impact. If there has been financial loss, say exactly what it was. If there has also been serious distress and disruption, say that too. Then be clear about what you want them to do. That might be paying what is owed, explaining the delay properly, reimbursing specific costs, and responding within a reasonable timescale. Many pension schemes have a formal complaint route, often called an Internal Dispute Resolution Procedure, or IDRP. In simple terms, that is the scheme's official route for disputes and administration complaints. It is usually the step you are expected to use before taking the matter further. It creates a structured record of the problem, and that can be very important later. If that formal route still does not resolve things properly, the Pensions Ombudsman may come into the picture. The Ombudsman looks at disputes and complaints about how pension cases have been handled. That includes maladministration, which is a formal way of describing poor administration. Things like unreasonable delay, failure to follow process, poor communication, or mistakes in handling a case can all matter. So the issue is not only whether the right pension amount eventually appears, it is also how the case was handled along the way. This is why your timeline, letters, emails, notes, and proof of costs matter so much. A stronger case usually shows four things clearly: what should have happened, what actually happened, what impact that had on you, and what outcome you are asking for now. That outcome may not be exactly the same in every case. It could involve getting the payment corrected. It could involve reimbursement for proven financial loss. It could involve recognition of serious distress or inconvenience where the handling has been especially poor. A general apology on a public level does not settle the individual damage done in a specific case. Your own record is what helps turn a broad failure into a case that can be considered on its facts. And there is a wider lesson here that goes beyond any one delay. If retirement is within 6 months, this is the time to become more deliberate than feels necessary. Not anxious, not suspicious, just thorough. Check what forms are needed, confirm that your contact details are current, confirm bank details early, make sure service history, part-time periods, address changes, and any other personal details are accurate. Keep copies of everything you send, note expected dates. If something is meant to be processed by a certain point, do not assume silence means all is well. That may feel slightly uncomfortable if you have spent a career trusting the system to work, but this is not about distrust. It is about protecting a very important handover. A defined benefit pension can still be a secure entitlement, and at the same time, the administration around it can go wrong. Both of those things can be true, so come back to that kitchen table for a moment. At the start, it was a pile of papers, an unpaid bill, a bank balance that did not make sense, and that sinking feeling that retirement had begun in the wrong way. By the end, the picture is different. The same papers are there, but now they are in order. Dates are written down, calls are logged, charges are saved, questions are sharper. The problem has not been dismissed, but it has been turned into something you can act on. That is the real protection here. If a first payment goes missing, start the written trail immediately. If retirement is getting close, start the checks earlier than you think you need to. Small administrative details may not look important until the day your income depends on them. After years of work, they deserve serious attention. And if something does go wrong, being prepared early can make a hard situation far more manageable.